All right, well, let me say hello and welcome to each and every one of you. Doug here with illegalist.com. I want to welcome you to another edition of Stock Market Mutterings, where, as I always say, I will do my best to take a grope in the murkiness, try to make some sense out of the stock market here for you and whatever I share with you, the strategies, the stocks we talk about. I do hope it helps put a little bit of money in your pocket. Now, for you guys out there that want some personal one-on-one attention, you want to take your trading to the next level, every day that the market is open, I am trading live on screen, very similar to how I'm doing it right here. Somewhere on this screen will appear a link if you want to join us each day in our live trade room. Every one of you are welcome. Click on the link. It's also down in the description box, and feel free to join us for daily live trading and live market commentary. Now, if you go back to the couple of the last YouTube videos that I was talking about, and the reason I did a couple extra last week was we were reaching a very critical area in the markets, both the SPY and the QQQ, where we were coming and re-rotating back down to recent support lows, and how that reacted when or if we got down to those lows would tell us a lot. And I actually did one on Wednesday talking about, are the techs ready to roll over? Here's what the charts say. And the charts were telling us that we were going to get the answer to what it was that we needed, either Thursday or Friday, and we got that on Friday. So for right now, the short term, to make, just cut through the bullshit here. In the short term, we bounced off of, most specifically, the NQ 10,600 and the 320 area on the SPY. The lows have held. We saw, at least for the first time in a little while, a rally that did not fade like we saw on Friday. This is something that we also covered in depth in those two videos. If you guys haven't seen them, just go back through the channel and look at them. Because one of the important things that we were talking about is market tempo and how things had changed, where rallies were getting faded. Good news was getting faded. Nothing could just continue to press through, only a handful of select names. But finally, we saw a broad rally Friday where everybody got a nice little lift, and that lift was not sold. So we didn't see some sort of balls out crash at the close like we have been seeing. So that's something positive to build on right now going into Monday. Now, based on that, I feel that that's triggered a short-term bullish signal in this market. The market showed its intentions, at least for now, at least for the short term, let's say a 1 week window, that at least for now, we're probably going to see a little bit more bullish activity. One thing you got to understand guys, is that in a market like this, it's touch and go. You're a little on, you're a little off, you're coming in, you're coming out. You got to be touch and go right now until you get cleaner signals and the market slows down. And again, in the last couple of videos, I've been talking about how this election might affect it, the things that were faced historically at this time, and seasonality and all that good stuff. Watch them if you want to know. I'm not going to waste time going through those right now. But anyway, let's talk about these markets and a couple of different stocks that we're going to look at. I got the SPY, and I've got it really kind of magnified down here. You can see how it come off the lower 320s, and it pressed, and it really closed strong, and it held up post-market. So, no surprises there, no selling off. That's good as it bodes forward to next week. Now, it will be really important early Monday, because I wouldn't be surprised to see a bearish attack early, trying to press this down, or some jitters come in, and people want to sell out on this. But if it can hold up and start to build. A couple of days ago, you got some highs roughly in this area, and you also see the 10 moving average. If we can push up into this range above, I think this would be, Wednesday's high. If you can move above Wednesday's high and stay there, it's important that we stay there on Monday. And I think the earlier parts of that week takes us back up into, the green here is the 20 moving average. On the daily chart, we start moving up here into the 330s, maybe even a little closer towards the 340s. Who knows? Just one step at a time. As I did mention, though, earlier, I'm not expecting for this market to just go back to like it used to be, where you're just going to come clean here and just 1, 2, 3 bars, take it all the way back up to highs. I'm not expecting that. I'm expecting volatility. I'm expecting whipsaw action intraday. But if we can block out the noise and take a look at what we saw, if the early portion of Monday can hold, I would expect that we get a little bit of bullish activity. If nothing else, that provides us with a great trade. Now, you see the markets tried to do that a couple of times. It bounced off the bottom, wasn't able to build, made a new low, tried to bounce off the bottom, made a new low. So that can't happen. Now, also, I'm not going to sugarcoat this either. If this low doesn't hold, you might as well just get the hell out, because the 200-day moving average sits way down here in the lower I think it's like 310 or something. I'm sorry, these prints so damn low on this small computer. But the 200-day moving average, you got some ways to go, and it's going to happen. If this does not hold, that is going to happen. So you should abandon the bullish thesis for the short term if that doesn't hold. No, I'm not thinking that's going to happen early That's where we are. We have our lines drawn. We know what to do if a certain scenario happens. If we start out strong, we hold Friday's levels, we don't get smoked out and start making new lows, we're good. We're probably going to have a couple of days of bullishness that we can work with. If it starts getting sold off, you start seeing heavy volume, maybe a news event comes pressing down on there. You never know with this market. It cleans out these lows. We don't have time to be bullish at that point. We just simply cannot make excuses for this market because it's going to roll over even deeper and find another level to base. So that's where we stand there. Quick snapshot here of the Qs, which was the leader. Same thing. It held up really well off of the lows. Got a nice little double bottom and pressing. Now this one's close to resistance from Wednesday, but the same thing. We're trying to get back into these previous high levels, previous highs back here on these days that I'm highlighting. Try to trade back up into this range up in here if this market confirms. Same thesis as the SPY. We hold early, we should see that activity. We don't hold earlier, forget about it. It's not. It's just going to dump. That's what's going to happen. What else am I going to say? It's going to dump. So, on that note, usually when you get into a market like this, it's really volatile. Sometimes it's better to trade the ETFs than it is individual names. Now, one of the things I highlighted in market corrections is that there's going to be spurts where individual days you get names that just perform solid, like a ZM, for example, or a Tesla. Maybe an NVIDIA stock that gets upgraded, has a strong day, and the market's just grenading. That happens. And in a volatile market, or especially a bear market, it becomes a stock picker's market because it's important the names that you're in and the stocks that you play, because they don't, the bull market, almost everything runs in unison. You don't have to be such a great stock picker, but in there, that's where the premium comes in. So sometimes it's just better to play the indices if you're looking for a regular bounce. Now you're going to see, and the reason I mentioned that is you're going to see a lot of stocks I'm bringing up that look good, but they all kind of look just like the market itself. So if we kind of just go down the line, I don't have any specific things I wrote down here as far as notes, but if I can look at things like SHOP, for example, for those that like the bigger stocks, sitting right here at a very tight resistance level. I know FB is something I've mentioned a couple of times on Twitter, a stock that's been sold off, a FANG name that's pulled back into support, that's just didn't quite participate as strong in the rally as I thought it would. So this could be like that little sleeping giant. At any moment, I would think some money comes flowing back into this one. And I would feel this one has probably one of the better chances of moving. I mean, look at it. It looks almost like the Qs. A little bit more extended selling here. I think you could also put all these popular names like Netflix. You could put Netflix in the same region here. Let's open it up, see how it's traded sideways. At this one, I think I'm throwing out some names here. I'm not getting fancy with you because I know as you go through your own personal list, you're going to see a lot of stocks that look just like that. That's the type of market that we're in right now, where the majority of stocks are going to replicate what the market's done over these last couple of weeks. DocU, I think, is another one here. It's got a pretty good base. Etsy. Same thing here. Etsy building a pretty good base right here. So I think those are all pretty good. Facebook, Etsy, Netflix, AMD. I'm going to put AMD on here. I might have already said that one. NVIDIA looks just the same. Probably has a $25, $30 day. Just creeping, waiting to happen on this. So if you look at those across the board, they all look the same. Outside of some of your recent movers like a ZM. Let me put a ZM up here. This one here is quite a bit extended and a little bit different. Same thing with a Tesla. But I think outside of that, you're looking at things like Adobe, Okta, Payc, WDay, Peloton, DocU. I mean, all this stuff that we talk about, Beyond, they all have some solid consolidation. And that's what we really want to talk about here too, as well as I end this, is what this week did accomplish, if nothing else, was it did firm up some sort of a bottom. So it was absent, if anything else, it was absent of panic. So you go back the week before, it was drop, bounce, drop, bounce, drop. Everything was getting smoked out. Even though it didn't build earlier in the week, and it was getting low as it was testing those important levels that I did those videos on, the thing we really need to recognize here is there wasn't any panic flush or panic crash. As it got down there, the market collected itself and made that bounce, which is what leads me to believe we're probably going to start the market out a little bit bullish. Now, on the other hand, this is a stock market. Sucker can do whatever it wants, right? If it wants to cheese you anytime, suck bulls in, and then smoke them out, it can do that. I mean, we never know, but I think at least as we begin the week, that's what's important, is that we position ourselves a little bit more bullish here. Now, on that note, like I want to do also make clear, if I haven't, which I'm sure you guys already know, this is not the time for you to load down either. I don't think you've seen enough clues from this market here that leads you to believe you can just put all your risk on the table here. This is not what you saw a couple of months ago. This, no, by no means, at least for right now in my mind, this is by no means the end of this story. Like, okay, we're just going to start rallying back up to highs. Now, maybe that happens. I'm not going to say that I can predict the future, because I can't, but I don't see that. The way this market's working right now with the election coming up, I don't think, I've been saying, I just don't think it's one of these fast recoveries. Maybe after that's over, we can have a solid November and December, or maybe we don't. Shit, who knows, man? I mean, we're just taking this thing one day at a time. And I want to emphasize that too. It's one trade at a time. It's one day at a time. That's all you can do. Everything's going to be independent of something else. You just have to keep plugging away at it, keep pushing away at it, a little bit here, a little bit there. You know, take your shots, but I still don't think we're out of the woods here. This is a risk-off market or any of that stuff. You got to be careful. If you get some gains here on your trades, got to nibble a little off the table, because you hold too long, you're going to get caught with your hands in the cookie jar probably. It's not going to be so cut and dry. But again, we'll get through that. So I'm going to wrap it up right there. I want to thank you for watching this Market Mutterings. Don't forget, you guys can join us any day that's live in the trade room to just kind of put this down into one little tiny synopsis. I feel we're going to be a little bit strong on Monday, Tuesday, maybe into Wednesday. Depending on how that strength is, maybe we get some signals there that show us something different. Maybe we get a bearish signal in there or an extended bullish signal. I don't know yet, but I'll know it whenever I see it. I would say advise with caution. Just because the market bounced on Friday, you're going to have some chasers probably come into that. Don't sit on this thing. I've been telling you, don't trust this thing. Don't think it's going to act like it did before, and you're just going to sit here, oh, I'm picking the bottom, because we think it's a short-term bottom, but I'm not quite sure I've seen enough signals to say this is the bottom of bottoms. But we're going to find out. So anyway, guys, thanks for watching this video. You know where I'm at if you need me. Take care and trade well.